C3IS Inc. is a Greece-based shipping company publicly traded on the Nasdaq under the ticker symbol CISS. Operating within the global shipping market, the company manages a diverse fleet that includes both dry bulk carriers and oil or product tankers. C3IS Inc. has been steadily transitioning its focus toward the tanker sector, seeking stronger earnings potential and more stable long-term cash flows. Leveraging strategic relationships and creative financing, the company aims to expand its fleet and enhance its market position. Its approach reflects a commitment to growth and adaptability in a highly competitive industry. C3IS Inc., a Greece-based shipping company, has been strategically shifting its focus from dry bulk shipping to the tanker sector. Management believes this transition offers stronger earnings potential and more stable long-term cash flows compared to the volatility often seen in dry bulk markets. By expanding its fleet with oil and product tankers, the company aims to capitalize on favorable charter rates and increased demand for refined petroleum transport. This move is supported by creative financing arrangements and relationships with affiliated shipping interests, enabling C3IS to access vessels and deals not typically available to smaller operators. Overall, the transition reflects a deliberate effort to enhance financial performance and position the company for sustained. C3IS Inc. operates a diverse fleet that encompasses both dry bulk carriers and oil or product tankers. This mixed approach allows the company to participate in multiple segments of the global shipping market. As of early 2026, the fleet consists of one Aframax oil tanker, two medium-range product tankers, and three handy-size dry bulk carriers. The dry bulk vessels are primarily used for transporting commodities such as grains and minerals, while the tankers carry refined petroleum products like gasoline and diesel. By maintaining a combination of vessel types, C3IS Inc. is able to adapt to changing market conditions and optimize its earnings potential. C3IS Inc. has adopted a fleet expansion strategy centered on gradual growth and innovative financing methods. Rather than relying solely on traditional bank loans, the company utilizes a mix of seller financing, related party deals, equity raises, and operational cash flow to acquire new vessels. This approach allows C3IS to manage acquisition costs effectively, reduce short-term financial pressures, and maintain flexibility in its capital structure. By leveraging relationships with affiliated shipping interests, particularly those connected to the Vafias shipping group, C3IS gains access to vessels and financing arrangements not typically available to smaller public shipping companies. This creative strategy positions the company to expand its fleet during favorable market conditions while minimizing financial risk. C3IS Inc. employs a multifaceted approach to vessel acquisition, combining related party deals, seller financing, equity raises, and operational cash flow. By leveraging relationships with affiliated shipping interests, the company gains access to vessels and financing arrangements that are typically unavailable to smaller publicly traded firms. Seller financing, such as interest-free deferred payment terms, allows C3IS to take immediate control of ships while postponing full payment, easing short-term financial pressures. Equity raises, including public offerings and at-the-market programs, provide additional capital for expansion. This flexible strategy enables C3IS to manage acquisition costs effectively and supports its ongoing transformation into a tanker-focused operator. C3IS Inc.'s close relationship with the Vafias shipping group provides a significant strategic advantage in the competitive shipping industry. Through these affiliations, the company gains access to vessels and financing arrangements that are typically unavailable to smaller, publicly traded shipping firms. This connection enables C3IS to secure favorable terms such as seller financing and interest-free deferred payments, which help reduce acquisition costs and financial pressure. By leveraging these unique opportunities, C3IS can expand its fleet more efficiently and strengthen its position in the tanker sector. Ultimately, these partnerships support the company's growth strategy and enhance its ability to respond to changing market conditions. Recently, C3IS Inc. expanded its fleet by acquiring 2 medium-range product tankers, each capable of carrying approximately 50,000 deadweight tons. These vessels, built in 2008 and 2011, are scheduled for delivery between the first and third quarters of 2026. Medium-range tankers play a crucial role in global trade, transporting refined petroleum products such as gasoline, diesel, and jet fuel to various markets. By adding these ships, the company aims to strengthen its presence in the tanker sector, where charter rates and revenue opportunities are currently more attractive than in dry bulk shipping. This strategic move is expected to enhance both operational flexibility and earnings potential for C3IS Inc. The tanker market is currently experiencing robust demand, driven by global trade in refined petroleum products such as gasoline, diesel, and jet fuel. Management at C3IS Inc. sees this sector as offering stronger charter rates compared to dry bulk shipping, which translates into more attractive revenue opportunities. This optimism is based on the stability and resilience of tanker charter rates, supported by ongoing energy consumption and supply chain needs. By focusing on tankers, the company aims to benefit from more predictable cash flows and enhanced earnings potential, positioning itself for sustainable growth in a competitive shipping landscape. C3IS Incorporated employs innovative financing structures to support its fleet expansion, notably utilizing interest-free deferred payment terms for vessel acquisitions. This approach allows the company to take immediate control of ships and begin generating charter revenue, while postponing full payment until a later date. By reducing short-term financial pressure, C3IS can leverage operational cash flow to fund future obligations or additional acquisitions. These flexible arrangements are often made possible through relationships with affiliated shipping interests, providing access to deals not typically available to smaller public companies. Such strategies enable C3IS to manage acquisition costs effectively and maintain growth momentum in a competitive market. By utilizing flexible financing arrangements such as seller financing and related party deals, C3IS Inc. can take immediate control of new vessels without paying the full purchase price upfront. This approach enables the company to begin operating the ships and generating charter revenue right away. Deferred payment terms reduce short-term financial pressure, giving C3IS time to earn income from the vessels before completing the full payment. As a result, the company can expand its fleet and revenue base more efficiently while managing cash flow and acquisition costs strategically. C3IS Inc. employs a range of strategies to acquire new vessels and expand its fleet. Seller financing allows the company to defer payment for ships, easing short-term financial pressures while generating immediate charter revenue. Public stock offerings provide access to expansion capital by issuing new shares to investors. Traditional shipping bank loans, secured against vessels and charter income, offer another avenue for financing acquisitions. Additionally, C3IS may recycle capital by selling older ships and reinvesting the proceeds into newer vessels, maintaining fleet value and operational efficiency. Small shipping companies such as C3IS Inc. often pursue a growth model centered on strategic asset accumulation. They acquire vessels during favorable market conditions, aiming to generate robust charter income and expand their fleet value. As the asset base grows, these companies can leverage their increased net asset value to secure additional financing and pursue further acquisitions. This approach enables them to scale operations efficiently while maintaining flexibility in funding strategies. Ultimately, their success hinges on market dynamics and the ability to manage risks associated with expansion and financing. The future success of C3IS Inc. is closely tied to the dynamics of the tanker market, with charter rates playing a pivotal role. Strong charter rates can significantly enhance the company's revenue potential, supporting fleet expansion and improved financial performance. Conversely, volatility in shipping rates may pose challenges, affecting profitability and the ability to secure favorable financing for new vessel acquisitions. The company's reliance on flexible financing structures and its relationships within the Vafias shipping group help mitigate some risks, but market conditions remain a decisive factor. Ultimately, sustained strength in the tanker sector will be essential for C3IS Inc. to achieve its growth ambitions and maintain stable cash flows. C3IS Inc. faces several key risks as it pursues its expansion strategy in the tanker sector. One major concern is potential stock dilution, which could occur if the company issues additional shares to raise capital for vessel acquisitions or operational needs. The firm also relies heavily on related party financing, particularly through its connections with the Vafias shipping group, which may limit its financial flexibility. Market volatility in tanker charter rates can significantly impact revenue and profitability, making earnings unpredictable. Additionally, the company must manage refinancing obligations and maintenance costs associated with its aging fleet, both of which could strain cash flow if not carefully controlled. C3IS Inc. has undergone a significant transformation, shifting its focus from dry bulk shipping to the tanker sector. By leveraging flexible financing arrangements and strategic vessel acquisitions, the company has expanded its fleet and improved its financial performance. Relationships with affiliated shipping interests have provided access to unique financing options, enabling growth that might otherwise be difficult for a smaller operator. While C3IS's future depends on favorable tanker market conditions, its approach positions it to capitalize on strong charter rates and stable cash flows. Overall, the company is evolving into a more robust, tanker-focused shipping operator, aiming to enhance its market presence and long-term profitability.